Hello and welcome to The Flying Frisbee. My name is Dominic Frisbee and today's piece is called The British Pound. Big falls coming? ? I was going to call this article A Tale of National Betrayal. Sterling is a national disgrace. If ever there was something that symbolised the decline of Britain from world leader to tin pot shite show, it is our currency. The US dollar has lost at least 93% of its purchasing power since World War II. The pound, which was a few cents shy of $5 at the onset of the war, today sits at $1.24. It's lost an additional 75% against the US dollar. It's shocking, an appalling betrayal by successive leaderships. When you devalue your currency, you devalue your entire country, the people's labour, their savings, their assets. And as long-time readers will know, I've identified a long-term cycle in the pound, and the next capitulation is due this year. And if this plays out, then the pound is about to hit the skids. Now let me start with my usual disclaimer. It's easy, there's a plane flying over, sorry about that, to look back at the past, find some arbitrary pattern, declare it a cycle, write some persuasive copy, and then all of a sudden you're a guru. When things don't pan out as they should, you blame some outside factor, usually the government. Cycles do exist. We have the seasons, the moons, the cycle of life. There are good times and bad times. There are investment cycles too, bull markets and bear markets. The Kondratiev cycle, the 18-year cycle in real estate, commodity super cycles, the 4-year presidential cycle. Mining is cyclical. New tech goes through a clear cycle as it evolves. I'm a big believer in the hype cycle. It's a useful thing to follow. But actually trading them in real time is hard. And thinking in terms of cycles does help you frame the bigger picture. It can give you an idea where you are in the grand scheme of things. But you can easily get wedded to the idea of a particular cycle, and then it's very hard to break the mindset. Even if real life right in front of you is telling you a very different story. I remember in the years after the global financial crisis being wedded to the idea of Kondratiev winter and the next Great Depression. The Dow, there were lots of people who could not get away from it. The Dow was going to 1,000, they said. It never went close. And here we are today, the Dow's 38,000. The problem was that the Kondratiev winter argument was persuasive. And once you've been hooked by a narrative, it's hard to break its shackles. So, to Frisbee's flux. With all that said, I'm now going to argue that there is an eight-ish year cycle in the British pound that goes all the way back to 1968 at least, and I've called it Frisbee's flux because I think I was the first to observe it and I've got to get my name on something. And we're going to start with a quick skim through recent sterling history, then we'll look at the chart, and finally we'll look at what's coming next. So in November 1967 the British government devalued the pound by 14%, from $2.80 to $2.40, in order to, and I quote, achieve a substantial surplus on the balance of payments consistent with economic growth and full employment. In the early 70s, after the Nixon shock, the pound rallied against the dollar a little bit, but we fast forward 8 years, 1976, 8-ish years, and we're in the year of the IMF crisis. And Chancellor, we've got a plane coming over, Dennis Healey, he's said to have gone cap in hand to borrow money from the IMF. 3.9 billion was the agreed sum at the time. It was the largest loan ever requested. Inflation in the UK had reached 24%, and from high to low, sterling lost 40%. It reached $1.60. But then the pound recovered, and by the early 80s, it was back above 240. But we move forward 8 years and we come to 1984, when the pound would drop by more than 55% to reach an all-time low against the dollar, $1.04 in early 1985. And this was during the miners' strike, shortly after the Falklands War. But the real issue was extraordinary US dollar strength, something which took collusion between the G5 nations, France, Germany, Japan, the US and the UK, and the Plaza Accord of 1985 to depreciate the dollar. But again, sterling recovered, and this time it went to $2. 8 years later, we come to the notorious cycle low of 1992 and Black Wednesday, the day that sealed George Soros's reputation with his bet against the pound. Sterling fell to $1.40, 30% loss, and the Bank of England took the UK out of the European exchange rate mechanism, the ERM. It rallied a bit. 8 years later, 2000, the dot-com bubble collapsed. The pound lost 20% of its value, again falling to $1.40. The pound, by the way, it's geared to financial markets, and when they struggle, the pound usually does as well. But again, it recovered. By 2007, it was above $2. Can you imagine? The pound above $2 in not so long ago. Then, 2008, global financial crisis, and yeah, the pound lost 35%, hit a low of $1.36. What did I say about the pound being geared to financial markets? Fast forward 8 years and the next low comes, 2016, with the infamous flash crash shortly after Theresa May's speech at the Conservative Party conference. Having been above $1.70 at one point earlier in the cycle, it hit a low of $1.14 according to some measures. And the overall drop from high to low was about 35%. That $1.14 number, by the way, it came in the early hours of the morning, so it doesn't show up on a lot of the charts. It doesn't show up on the chart that I'm about to show you. But here we are, 2024, 8 years on, and the next capitulation is due. Are we about to enter the drop zone? It could well be. But in any case, here's an illustration of that cycle, and you can see how every 8 years the pound hits a low. And this chart starts, by the way, at 1970. I couldn't find data going back to 67, 68. So, what is coming next? How do you protect yourself? How do you profit? So the rally off the 2016 lows was probably the limpest in sterling's history, and the 2016 low was retested in the corona panic of 2020. Then we got a decent enough bounce to about $1.40, $1.42 by summer 2021 before the Conservative Party fell apart and the pound followed. In September 2022, with Liz Truss now Prime Minister, the Bank of England announced the end of quantitative easing and the beginning of quantitative tightening, heaping selling pressure onto the gilt market. That was followed by Chancellor Kwasi Kwarteng's infamous surprise budget, and sterling capitulated all the way to $1.02. Now, in many ways, that should have been the cycle low. Did it come early, or are things about to fall apart again? We got a rally back to $1.30, but in the last month or so, the wheels have come off a bit. Currently, we're at $1.24, $1.25. The way to hedge yourself against this inevitable devaluation is to hold as little as possible in sterling. It's why I advocate gold and Bitcoin. These are both liquid, independent stores of wealth, independent monies, which our dysfunctional leaders cannot debase. It also makes sense to hold stocks and real estate as well as foreign currency, though the nature of fiat means it will still inevitably depreciate, but perhaps not as fast as sterling. There is also the option to short the pound. The problem is that you would be shorting from already low levels. To short sterling against the yen is a possibility. I mean, that particular pair is at all-time highs, and there's a big drop waiting to happen if the yen suddenly appreciates. But that trade has been a widowmaker. A widowmaker indeed. I know, I've tried it. What's going to trigger a sell-off? Who knows? Got a general election coming up this year. It's possible there might be some instability around that, though at the moment it looks like a slam dunk for Labour. It's theirs to lose. I don't like the look of what's going on at the Bank of England at the moment, with all this passing quantitative easing, tightening losses, saddling taxpayers with losses, £100 billion in losses. That's what the bank estimates. 130 billion is one measure. Given the bank is unaccountable to the taxpayer and we can't vote it out, one has to wonder what fiddlesticks. But that's the education budget for 1 year, or more than twice what we spend on defence or transport. So maybe that's where the trigger's going to come from. QT is going to trigger something. It has previous. But as I mentioned, yeah, QT and the Bank of England were intimately involved in the fiasco for which Kwasi Kwarteng and Liz Truss carried the can in 2022. But these crises always come from somewhere that nobody is looking. Even if you know it's coming, it can be hard to predict the actual trigger. And even if we don't get a sterling crash and my cycle is completely wrong, the pound is still going to buy you a lot less 5 years from now than it does today. So hold as little as possible is my take on things. If we do get said crash, then your gold, Bitcoin and other assets will purchase you a load more than they do now. Thanks very much for watching. Please subscribe to the channel. I'll be back with another video very soon. If you want to buy gold, by the way, my recommended bullion dealer is the Pure Gold Company, and I'll put a link to them in the comments below. But until next time, goodbye.